Deep Dive breaks down big ideas sent in by our listeners and do it in about 5 minutes. Got a topic, article, or book you've been meaning to understand but never had the time? Send it our way. We'll do the heavy lifting and give you the essentials fast.
So today we're jumping into something you've definitely heard about, cryptocurrency. Lots of buzz, right? Promises of decentralization, maybe huge returns. But, our sources paint a slightly different picture too. So today we want to cut through some of that hype. Let's unpack the very real risks involved in this, exciting but pretty volatile space.
Exactly. That's the mission for this deep dive. We're looking at the sources you gathered to really pull out the key insights on the volatile and often risky landscape of crypto investing.
Right.
We just want to make sure you, the listener, are really well informed about what's actually at stake here beyond just the headlines.
Okay, so let's start peeling back that first layer. One thing that really jumped out from the sources was the sheer scale of the price swings. How does that volatility, really stack up against more traditional investments? What does it mean for someone putting their money in?
Well, it's pretty fascinating, actually, just how extreme it can be. I mean, try to imagine your normal stock portfolio losing, say, a third of its value before lunch.
Wow. Yeah, that's hard to picture.
But that's almost the daily reality sometimes in crypto. The sources mention 20 to 30% swings in a single day aren't that unusual.
30% a day.
Yeah. And even Bitcoin, the biggest one, supposedly the most stable, has had these massive crashes over 80% multiple times in its history.
80%, okay.
So sure, it absolutely offers chances for quick profit, but it just as easily creates the potential for really substantial, really swift losses.
A real roller coaster then. Okay, but setting aside the wild market moves for a second, traditional investments usually have some kind of regulatory safety net. What happens in crypto where those guardrails often just aren't there?
That's a really key point because unlike, say, stocks or bonds, crypto is, for the most part, largely unregulated. There's no central authority, no SEC equivalent for most of it, no FDIC insurance like with a bank. And this lack of oversight, it makes the whole space really vulnerable to, manipulation, fraud, insider trading, things like that.
So scams must be a big issue.
Oh, definitely. The sources really highlight how common scams are. You've got your classic Ponzi schemes, pump and dumps where people hype a coin just to sell it off, rug pulls where the developers just vanish with everyone's money, even completely fake initial coin offerings or ICOs. And the kicker is if a crypto exchange suddenly collapses or if a project turns out to be a scam, there's often very little you can do to get your funds back, especially if you're new to the space.
So little recourse.
Okay.
And without those protections, what about the safety of the assets themselves? If you actually own some crypto, how safe are your digital coins from, theft?
It's a bit of a paradox. The underlying blockchain technology itself, generally very secure, but, and this is a big but, the platforms, the exchanges, the digital wallets you use to hold and trade crypto, they're constant targets. Okay.
I mean, billions, literally billions of dollars in crypto have been stolen. We see exchange hacks, clever phishing schemes tricking people out of their details, even vulnerabilities found in the smart contract code itself.
Like a software bug someone exploits.
Exactly. And here's the crucial part. If your private keys, the secret codes that prove you own your crypto, get compromised, your assets are just gone. Permanently, no takebacks.
That sounds incredibly stressful. Okay, so even if you manage to avoid the hacks and scams, there are external forces too, right? How do things like government actions play into this?
Yeah, that's another layer of risk. Governments all over the world are still sort of figuring out how they want to handle cryptocurrency. And their decisions, or even just rumors of decisions, can have these really immediate, really drastic effects on prices. Remember when China banned crypto trading and mining?
Oh yeah, that caused chaos. Exactly, sent the markets into a total tailspin almost overnight. So future regulations could suddenly restrict how you access crypto, maybe tax gains really heavily, or, even outlaw certain coins entirely. That adds a whole different kind of uncertainty.
Wow. Okay, so between the volatility, the lack of regulation, the security threats, and now potential government crackdowns.
Yeah.
I mean, that's got to take a psychological toll on anyone invested, right?
Absolutely. It really does. Think about it. The markets run 24/7. The prices can swing wildly at any moment. It creates a huge amount of stress.
I can imagine.
And that stress can easily lead to Well, irrational decisions. We see it all the time. People getting caught up in FOMO, the fear of missing out, so they buy high near the peak.
Right.
Or they panic sell during a sharp downturn, locking in their losses. It's really tough to stay level-headed in that kind of environment, and it often just makes losses worse.
So bringing this all together, what's the main takeaway for you, the listener, if you're thinking about getting into crypto? The sources seem to circle back to a central idea.
They did. And it's basically this. Look, crypto can potentially be a part of a well-diversified investment portfolio, but it is absolutely not some kind of risk-free shortcut to getting rich.
Okay.
You really have to approach it with extreme caution. Think long-term, understand exactly what you're buying into, and maybe the most important advice.
Yep.
Never, ever invest more money than you can actually afford to lose.
It feels like the very things that make crypto seem so exciting, the novelty, the potential returns, the lack of traditional rules, are precisely what make it so risky, too.
That sums it up perfectly. It's a double-edged sword. Know the risks involved, understand them, and tread very carefully.